Welcome to the Deep Dive. Today we're taking a close look at Maruti Suzuki India Limited MSIL. An absolute heavyweight in the Indian auto scene.
Absolutely, a household name.
Right. And our mission really is to unpack where they stand right now. Market position, financial health, their strategy going forward. We're digging into company data, market trends, performance over the last decade.
It's quite a story.
It really is. A company that basically set out to, democratize car ownership in India. That was the goal.
Yeah, that's spot on. It's more than just cars, isn't it? It's about how a nation moves. Think back to their founding, the government's role in '81, that crucial Suzuki joint venture.
Yeah.
It really did open up car ownership for millions.
A powerful legacy, no doubt. But even giants face new challenges, new landscapes.
Always.
So let's start there. Market position. Because the numbers, they show some, let's say, interesting shifts away from that old dominance. They had, over half the market back in 2020?
That's right, yeah.
But sources are saying their share actually dipped below 40% recently, like April 2025. What's behind that? What does it tell us?
Well, it's not just a blip. It feels like a real shift in what people want. Maruti still dominates the used car market, definitely. But their traditional strength, the small cars, the hatchbacks, that's facing some pressure.
Okay.
The decline in new car share, a lot of that is tougher competition. I think Mahindra, they've surged, really capitalized on this massive boom in SUVs.
Oh, like SUV factor.
Exactly. It suggests, rising incomes, changing lifestyles maybe. People want different things now. And Maruti, historically focused on those super fuel-efficient small cars, they're kind of playing catch-up in the SUV segment.
Okay, so market share is shifting. How does that translate financially? Is the company looking vulnerable, or is it still fundamentally strong?
Financially, no, not really vulnerable. If you connect this to the bigger picture, Maruti Suzuki is fundamentally still very strong. Looking back over 10 years, you see solid long-term growth.
Right.
Revenue, earnings. But what really stands out, their balance sheet. It's virtually debt-free. That signals incredible conservative financial management. It's a huge strength for any company, let alone one this big.
That debt-free point is definitely a big plus. Paints a picture of real stability. But the data also seems to show a bit of a slowdown in short-term earnings growth. How does that fit in?
That's a fair observation. Their 5-year average earnings growth, it's impressive, like 31%. But the most recent year, about 7.5%. That's below their own average and the wider industry.
Okay, why is that?
It points towards recent pressures. Things like commodity prices going up, maybe more spending on promotions to fight that competition. It hits profitability. Also, their return on equity, the ROE.
Right. How efficiently they use shareholder money.
Exactly. It's healthy, 15.1%. But it is below the industry average, which is closer to 21%. Part of that, though, is because they have so little debt. It shows a more conservative approach, not using borrowed money to chase higher returns.
Okay, so market position shifting, financials robust, but with some recent earnings pressure. What does this mean if you're looking at it as, say, an investment? How do you value Maruti Suzuki today, using maybe Benjamin Graham's ideas?
Yeah, from a Graham value perspective, it's nuanced. Their PE ratio, price to earnings.
How much you pay per dollar of earnings?
It's a bit above the immediate industry average, but actually quite a bit lower than its own history over the last 3 years. So that suggests the stock might be, fairly valued, maybe slightly overvalued right now. Its strong finances offer safety, sure, but it doesn't scream deep discount or huge margin of safety like a classic Graham value play might. It feels more like a stable hold than a bargain bin find for value hunters right now.
So putting it all together, is Maruti Suzuki just sticking to its old ways, or are they actively trying to pivot to adapt?
Oh, they're definitely pivoting, no doubt. They're at a really critical point, facing that big shift to SUVs head on, and also navigating the EV transition maybe a bit more slowly, but strategically. And they're actively diversifying, getting into new areas like fleet management, the used car trading side, even EV charging infrastructure. That adaptation, it's crucial for staying relevant long term.
And what about exports? The sources mentioned that too. How big a deal is that for stability?
Oh, it's vital. Really important. Sources mentioned, I think, a 4.5% dip in domestic sales in one quarter. But that was massively offset by a huge jump, like 37% in exports.
Wow.
It shows they can really leverage India as a manufacturing base for the world. That's a crucial buffer when the domestic market gets tricky. Now, look, No company's perfect. There was that past issue, the penalty for dealer policies.
Right, the competition issue.
Yeah, a reminder about governance. But the core strength and the proactive strategy seem pretty clear.
Okay, so let me try and wrap this up for you. We're looking at Maruti Suzuki, a financially very solid company. Almost no debt, strong growth over the long haul, still a major market player, even if that dominance is being challenged.
No.
Valuation-wise, seems fairly valued to maybe a touch overvalued based on Graham's principles. So safe, but perhaps not a deep bargain right now.
Exactly. And importantly, it's really at a crossroads, dealing with the SUV trend, figuring out its EV path, but it is moving, diversifying into new services, and those exports are a real cushion.
So the final thought maybe, considering that strong foundation and these pivots they're making, what role is Maruti Suzuki ultimately going to play in shaping India's mobility future as things keep changing so fast?